Welcome to Shortview Trading. This is your 1 minute market hit for Tuesday, the 28th of January. What matters today for traders? Yesterday, we talked about the three waves that tend to occur in pullbacks in equity markets. Pullbacks in the uptrend tend to have those three waves in a sell-off. A wave one, initial wave of selling, followed by wave two, a relief rally whereby some of the losses of wave one are retraced and got back, if you like, in wave two. And then a third wave, another wave of selling down to the intraday lows of wave one or even lower. That's the typical play out pattern in pullbacks in uptrends in bull markets. And our models are very good at picking up those swings within those waves, because really they're based on fear and greed, those swings. And of course, that's really what the risk appetite models are. They're fear and greed models. And so it's interesting, as we noted yesterday, a number of models in the short term increasingly moving on to buy. The 1 to 2 week signals increasingly coming through to generate buys. And there are four key charts here I wanted to show you. Firstly, our short-term risk appetite scoring system, which has very quickly moved back onto strong buy, as you can see now. This is telling us the market's pretty fearful. Secondly, our short-term technical scoring system, which has moved swiftly from sell onto strong buy in recent trading sessions, also encouraging us to play that wave two relief rally. Third chart we're pulling up in front of you now is the steepness of the volatility curve. Back a week or two ago, the volatility curve was pretty steep. Short dated VIX was low, medium longer term dated VIX was much higher. That's flattened out considerably. This steepness is now basically generating a buy signal, telling us there's fear in market prices. Again, lean against that. Look for the wave two relief rally on the back of that. And finally, the fourth chart we're showing is your percentage of single stocks that are overbought in US equity markets. This model looks about 2,500 single US stocks and aggregates their RSIs and generates a signal from that total. And again, you can see it's back at its sort of buy level. So the models are pretty consistent across the board, largely without exception. There's one or two small models that aren't quite there yet. That suggests to us increasingly this buy the dip wave two relief rally is quite likely. For full details on how we're playing the markets at the moment, please see today's Daily Rag, available to subscribers and on the website. So what are we watching today? Three key things I think market participants will be focused on. Over and above price action, that will engage most of, I think, of people's thinking is the type of price action that plays out. But the other three things are macro data, particularly in the States. We've got the Case-Shiller house price index. We've also got the US durable goods orders and one or two other bits and pieces. Elsewhere, we've got some central bank speakers, particularly the ECB, Villeroy and one or two others may say something interesting. And finally, of course, it's US Q4 earnings continuing. Of course, this is a big week. 145 S&P companies this week are reporting. Today, we get into the sort of tech stocks with Apple, including some cyclical stocks. So that's it from us. That's your 1 minute market hit for Tuesday, January the 28th. Thank you very much for listening. Please do subscribe on YouTube, Facebook, LinkedIn, and or Twitter. Thank you.